You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I would feel would benefit you. But before we get into our intriguing content today, I will tell you that our friend Tom Borsuk is on the way. He will be joining us, Senior Samaritans. Tom's been a long-time guest on Ron Siegel Radio. I think you're going to really enjoy what we're going to chat about today, even though he is a Bruin. We don't hold that against him. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me anytime, 800-306-1990, 800-306-1990. While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Again, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And, of course, we are celebrating today. Now, remember, I'm going to tell you this because I do share this all the time. We record live on Wednesday mornings, 10:30 a.m. If you want to join the conversation, all you need to go is StreamYard.com/Facebook, StreamYard.com/Facebook. Tell them who you are, give them the authorization to share your information, and love to have you join in. Any questions you might have, join us. But like I say that because then we're broadcasting over the weekend. So even though as I record this Wednesday morning, some of the data is going to be accurate today, but might change. But with celebrations, April Fool's, National Sourdough Bread Day, April 1. I am a breadaholic. I love bread. Where's your favorite sour? Don't tell me San Francisco. Where's the favorite bread coming from? Love good bread. Peanut butter. Well, do we put the peanut butter and jelly on the good bread or do we just put that on plain bread? It can be whatever you want. Peanut butter and jelly day. I like peanut butter and chocolate personally, but today's April 2nd, peanut butter and jelly day. National Reconciliation Day. Well, that was yesterday if you're listening to us on radio. So today, all bets are off. Handmade Day. I don't know what that is. That could be a problem. But National Chocolate Mousse Day. Yeah, I like that one. I can go with chocolate mousse all day, any day. So chocolate mousse, that's a good one. I like chocolate mousse. Do we have any others, Josh? Did I miss any of them? Oh, how could I have missed this one? World Party Day. How do they have a party day on Sunday? We don't make them. We just report them. World Party Day as well. So I guess I'm going to be having some extra vodka this weekend and maybe a bottle or two of good wine. Let's move right along, see what's going on in the world. Well, we're going to tell you interest rates have been skyrocketing. They did take a little bit of a dip. So as always, I love this one because I used to report the Freddie Mac rate. And it comes out on Thursday, so I didn't have an accurate number to report when we were recording the broadcast for the weekend. But now, the best source out there, I shouldn't say the best, I'm going to tell you this one because I'll use their exact words. OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. So a 4.87 would be as of March 29th, that's what loans were locking at. Why do I bring that up to you? Well, if you didn't refinance when rates were in the twos and you were waiting for them to go lower, sorry. If you didn't refinance when rates were in the 3 because you wanted to get them back to the 2s, sorry. They're in the 4s right now. And if you didn't refinance then, you're still looking at that 6, 7, 8, 9% interest rate. What are you going to wait for? You're going to hope they go back to the 2s? I'm going to suggest that you might be waiting a long time. I don't know because my crystal ball isn't working, but rates in the 2s, I don't think so. Here's the issue. Lots of folks are talking right now that we do have a recession coming. Now, here's the issue. Recession does not mean a drop in real estate because for the most part, real estate does not drop in a recession. It did one time, very, very little amount. But you say, Ron, it dropped a lot in 2008, 9, 10. Real estate caused the recession then. Real estate was the cause of that recession. So real estate went down, we went into recession, not the other way around. It wasn't that we had a recession and real estate then pushed it down. That was not the way it went. So the issue becomes we're just looking at these things and understanding what happens in the marketplace. The market is all about the fact of the market, I should say, is that when interest rates go up, real estate generally does a really, really good job. Real estate continues its upward climb. And I just I'm going to throw a curveball at Josh. He does a great job for us. So I just threw a chart into our show folder for today. While I'm talking, hopefully Josh can grab that chart. But it basically shows you during the last recessions that real estate goes up in value. Now, most companies are saying that we're going to see an increase in interest rates. But let's just use a simple number. And you're going to hear this later in the broadcast. I'm going to go into it in more depth. But real estate generally goes up. $400,000 property, we say appreciation 9% this next year. So a $400,000 property is going to be, what's that, $436 by the end of the year. If things go as they're projected, I don't know whether they will. Then we go into a recession. Interest rates drop generally during a recession. So we don't have that overlay on this chart, but you can see going back to, I think this chart goes back to 1960. And real estate goes up almost every single time during a recession, with the exception of 2008, which real estate caused that recession. So if you're thinking about buying, now is a great time to buy because you don't want to wait for the rates, for the property values to go up. Now, if the interest rates drop during the recession, okay, not a problem. Restructure that loan, get a better rate for the remainder of your life of the loan. No matter what anybody says, we only keep our loans 3 years. Here's the other part of that story. If you've got a lot of household debt and you've made good money on your real estate over the last few years, I'm going to suggest call your favorite lender, 800-306-1990. Operators are standing by. And chat about, will it benefit you to restructure your loan? Get rid of all that debt, do a cash out refinance, debt consolidation. And our team has some great tools to demonstrate whether it makes sense for you or not. But do that debt consolidation loan, look at it, see if it benefits you. If it does, do it. Because in a debt consolidation, cash out loans always have a higher interest rate. Now, you can buy them down, but they have a higher interest rate than a rate and term or a purchase money. I am not recommending you buy them down right now. But get rid of that debt, restructure with the plan that down the road you're going to be watching, or if you've got a great lending team, they're doing it for you. If you've got a great liability advisor, hopefully you've got a great financial advisor, right? If you put your financial advisor on a scale of 1 to 10, can't use a 7 because that's called a cop out. But if it's an 8, 9, or 10, you got a financial advisor who stick with them. We might even want to talk to them and see if we can send them other people. But if you've got a financial advisor that's 6'5", 4 or worse, give us a call because we'll put you in touch with a great one. But I digress. That's financial advisors. They deal with the asset side. Liability advisors deal with the liability side of your balance sheet. We did a whole program last week, rsrnodebt.com, rsrnodebt.com. talking about how to get out of debt in a very, very short period of time. RSR. Now, all you got to do is fill out the intake form. Let us know what your numbers look like in certain specific areas. Our team will put together a custom scenario for you, but you can go and get all that information, rsrnodebt.com. And it's just some great information. We like to give that to you for free. But let's give you a few other things for free because Josh is telling me that I'm talking too much. rsrcreditbook.com, rsrcreditbook.com. Get a copy of the credit book that we give away for free. Thinking about buying a house? I know that it's getting to be that season. rsrhbg.com. That's our newest, that's our spring edition of our home buyer's guide, rsrhbg.com. And yes, of course, you can get our home seller's guide, rsrhsg.com, rsrhsg.com. Just a few things to give you today. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, got a lot to cover for you or with you today. We're going to chat about what's happening with mortgage rates and where will they go from here. We'll talk about it. I'm sure I'm not going to get to our better outcome segment, and I probably won't even get to our Your Credit Matters. We'll give those to you. We'll put them online. Make sure you go to our social channels. Our team does a great job of getting those online. But you can reach me anytime off air, number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make that call, 800-306-1990, 800-306-1990. And let's take a look at it. We talked to you a little bit in the opening block about where mortgage rates are according to our friends OBMMI. It's the Optimal Blue Mortgage Market Index, and it gives us great information. And if you watch or if you look at this, what's happened for this year, pretty amazing what we're seeing for the last 90 days, what's happened with interest rates. Because we look at it and we say that as of, let's just go to the first of the year. If you're looking at the chart, we've got the current numbers, but the first of the year, interest was at 3.409. That would be the 30-year fixed rate loan. That was the average of what they were locked at OBMMI. And if you look as of the 29th, I think it is, 29th, the report is the 30th, so the date is the 29th of March. Rates are at 4.87. 4.87. So they're up almost a half a point, 1.5 points. December 29th, 3.36 at a point and a half gives us 4.86. So we're basically up 150 basis points, 1.5% since the first of the year. That's 3 months. Wow, hard to believe we're already at springtime. April. March is the first quarter's done. But here's the issue. Interest rates are going to continue to rise. The Federal Reserve has said that they want to raise rates continually. Two banks, Bank of America and Citi, one came out and said they're expecting the next two rates go up 50 basis points. The other said the next 4 times they're going to go up 50 basis points. Does that affect your mortgage? Not directly. That's the federal funds rate. What affects your mortgage is the mortgage-backed securities. Now, the Fed funds rate does affect prime rate, which directly affects your home equity line of credit if you have one. So if you have that home equity line of credit, you may be looking right now, it might be a good time to call your lender or call our team, 800-306-1990. Operators are standing by. Call the team and say, you know something, I want to consolidate my loan. You probably have enough equity. Consolidate everything into a new single loan and see if that makes sense for you and your family to get rid of the uncertainty of that adjustable rate mortgage on that home equity line, because that is controlled or driven by what the Federal Reserve does. So we want to make sure that you're watching that. Our team does that for every one of our private clients. We want to make sure that you're getting that as well. And again, take a look at the debt consolidation that we spoke about a little earlier. That debt consolidation is a great tool to help people. Just throw that out there. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990.